Palantir is no longer being valued like a normal software company. At around $135, the market is trying to decide whether this becomes one of the core AI infrastructure companies of the next decade or whether investors already pushed the stock too far too fast. So the real question is simple. Can Palantir realistically hit $200 from here? The reason this matters now is because Palantir just delivered one of the strongest growth quarters in big tech software. First quarter 2026 revenue jumped 85% year over year. US revenue grew 104%. US commercial revenue exploded 133%, and management raised full-year guidance to 71% growth. Those are not normal numbers for a company already this large. That is why many investors are no longer treating Palantir like a data company. They are treating it like AI infrastructure for governments, defense systems, and enterprises that need AI running inside real operations. But this is also where the risk starts. Palantir trades at one of the richest valuations in the market, with a price to earnings above 150. Bulls see a company dominating operational AI. Bears see a stock already pricing in years of perfect execution. That tension is exactly why the stock moves so violently. The bullish scenario is straightforward. If Palantir keeps turning AIP into the standard platform for enterprise AI deployment, the stock can absolutely push toward $200. The company is not just selling chatbots or dashboards. It helps governments and corporations connect data, operations, decisions, and AI models in environments where mistakes are extremely expensive. That is a massive difference. This is also why recent Ukraine partnership expansion matters. Reports say Palantir deepened its AI collaboration across military and civilian systems, with CEO Alex Karp meeting Volodymyr Zelensky in Kyiv. Investors see this as proof that Palantir is becoming trusted AI infrastructure in high-stakes environments, not just another AI startup chasing headlines. And the financials make the story even stronger. Palantir reported $871 million in GAAP net income in first quarter 2026, with a 53% margin and adjusted operating margins around 60%. Usually companies grow fast or stay highly profitable. Palantir is trying to do both at the same time. If that continues, institutions may keep accepting the premium valuation. The second scenario is probably the most realistic near term. Strong business performance, but a stock constantly fighting valuation pressure. Analysts remain extremely divided. Some targets sit near $255, while others are closer to $90. This tells you Wall Street is not debating whether Palantir is important. They are debating how much investors should pay for that importance. And this is where expensive stocks become dangerous. Good results are not always enough. The market expects perfection. One weak guidance number, one slowdown in commercial growth, or one disappointing contract cycle can trigger major volatility. To reach $200 from around $135, the stock still needs roughly a 48% move. That usually requires another massive catalyst wave, stronger AI adoption momentum, or another major guidance raise. The bearish scenario is the one investors cannot ignore. The biggest risk is not that Palantir suddenly collapses. The bigger risk is that growth slows slightly while valuation stays extremely high. In expensive AI stocks, even small cracks get punished hard. Competition is also becoming more serious. OpenAI, Anthropic, Microsoft, Amazon, Google, and Nvidia are all building deeper enterprise AI ecosystems. If companies eventually decide those ecosystems are enough for workflow automation and AI integration, Palantir could face pressure on growth and pricing power. There is also geopolitical risk. Some European governments have already shown resistance toward Palantir software because of sovereignty and data control concerns. That does not kill the growth story, but it reminds investors that international expansion is not only about having the best technology. Before we continue, if you've been following this channel, you know I don't waste your time with hype or guesswork. I focus on research, real insights, and tools that can actually help investors. That's why I've partnered with The Motley Fool. one of the most trusted names in the investing world for over 20 years. You'll find my link in the description. Is the easiest way to check them out and see what they offer. That link also gives you access to special deals or discounts they have available right now. And yes, it helps support the channel too. Now let's get back to the video. So can Palantir reach $200? Yes, absolutely. The company has explosive growth, strong profitability, government credibility, and one of the strongest AI narratives in the market. But it is not a low-risk path. At today's valuation, investors are paying for a future where Palantir becomes one of the core operating systems behind enterprise and government AI. The next phase depends on evidence. Investors need to see more major government contracts, stronger commercial AIP expansion, continued guidance increases, and prove that margins stay elite while the company scales. If Palantir keeps executing at the pace seen in first quarter 2026, $200 becomes realistic. If growth slows or competition starts eating into the narrative, the stock can correct hard even if the business itself remains strong. That is why Palantir is one of the most important AI stocks to watch right now. The upside is massive, the expectations are massive, and the next earnings cycles will likely decide whether $200 becomes the next major breakout level or another reminder that valuation still matters in the AI boom. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.